Welcome back, smart investors. This is Smart Real Estate with Westcliff. I'm Addy Saeed, joined by my co-host Kaz Jaffer.
Today, we're tackling a crucial topic that every real estate investor needs to master, which is risk management. Let's break down the common risks and share some strategies to mitigate them effectively.
All right, first up, let's talk about market risk. This includes changes in the economy, fluctuations in property values, shifts in consumer behavior. To manage risk, investors need to conduct thorough market research, understand economic cycles, and diversify their investment portfolios across different property types and geographical areas.
Another significant risk is tenant risk. The success of rental properties depends heavily on reliable tenants who can pay that rent on time and maintain the property. To mitigate this risk, it's vital to implement a pretty rigorous upfront tenant screening process. This includes getting the credit scores, employment history, character and employment references, and of course, making sure you have good relationships with your tenants, understanding that tenant laws can help you manage some of this risk.
Guys, another thing that I'd like to add in tenant risk is in Ontario, we also have Residential Tenancies Act. So that's a huge risk for a lot of the investors. So local and understanding of local law is very, very important and will help you mitigate a lot of tenant risk. Financial risk is also a big factor, especially related to interest rates and the ability to cover mortgage payments. To manage financial risk, investors should secure fixed rate mortgages when possible to avoid fluctuating interest rates. It is also wise to have a reserve fund to cover unexpected expenses or vacancies too.
Absolutely. As a CPA, financial risk is music to my ears. It's one of those things that's very critical. When we're working with clients, one of the important things to think about is, what are some of the restrictions your lender might have, really making sure you're managing that risk. And as Addy has rightfully pointed out, really looking at making sure you've got reserves, especially in times like now with higher than normal interest rates. But another type of risk that we cannot forget about is compliance risks. This includes zoning laws, building codes, and other regulatory requirements. If you fail to comply on these areas, there's fines, legal challenges. Investors really need to be informed about these relevant regulations and potentially engage legal experts specializing in real estate who can help you ensure compliance.
Exactly, Kaz. Effective risk management involves being proactive, well informed, and ready to adapt new information or changes in the environment. That's all for today, folks. Thanks for joining us on this deep dive into risk management in real estate investment. Thanks for joining us. If you've enjoyed this discussion, don't forget to like, subscribe, and leave us a review.
And of course, if you have any questions or need more personalized advice on your investing journey, please reach out to us at www.westcliffam.com, or you can text or call us at 647-799-2264. We're here to help you navigate through your investment journey safely and, of course, profitably.
And remember, Smarties, this podcast is for informational purposes only and should not be considered investment, tax, financial, zoning, legal, or any other form of professional advice. Always seek the help of a qualified professional before making any investment decisions. See you on the next episode.